French fry shortage? No, no, no. That's right. That's what we're going to talk about today. Inflation is getting out of control. As you know, I'm going to show you some information that I believe is critical for you to understand everything from China to the US to Europe. We're going to talk about it all. Let's begin, okay? Taking a look here, charting the global economy. Jobless rate in the US falls below 4%. So on one hand, you have the unemployment rate measured as the U3 unemployment at 3.9% in the United States. I'm going to cover several charts from this right now, but I wanted to cover one thing really quickly. I'm just going to move through these just to show you. Meat and egg shortages fears after stores report bare shelves. That's one thing. You got the growing global potato shortage affecting French fries from Japan to Kenya. That's a big deal, all right? Mexico ends the year with inflation at 7.36%. That's the most in 20 years. Then you have real estate. Look at this. The Greater Toronto Area real estate breaks an annual record in 2021. UBS had already measured it as one of the biggest bubbles in the history of the world, and yet it breaks records. This is out of control. In fact, Canadians prefer rate hikes during the highest inflation since 2003. This is how bad it's getting, that people are actually saying, yeah, you might want to increase. The amount of real estate that's available today is definitely low. You got inventory, you got supply and demand problems. There's no doubt, not just for real estate, but it goes for a lot of different things. And then on top of that, you've got the inflationary pressures coming from both the fiscal and monetary side, what the government is doing and what the central banks are doing. Take a look. New York Port hustles to cut a rare logjam amid labor woes. I've been hearing from people all over the world. I've been seeing the stories. You've got people that they need to stay home. They can't work. So now they've got their arms crossed and they are waiting while there are shortages developing. There are problems left, right, and center. And this is not good for the foreseeable future. So what can we do about it? We'll talk about that in just a second. I just wanted to bring you some of the data because that's huge, okay? In the video that we'll post, if you're watching this, the post tomorrow morning, I get into, a lot of the inflation factors. I get into cryptocurrencies and so on. But take a look. Here you can see the U3 unemployment rate. This is unbelievable to say the least because it's basically at the level it was at in 2019. Does that make sense to you? Look at this. Factory gauge eases. Declines in the index of prices paid. Supplier deliveries pull down the gauge. Fantastic, because you don't want to necessarily see this going through the roof, right? You don't want to see it. Then you have this. Migration gap. There's a shortfall of almost 1 million US work visas compared to what was there prior, okay, based on the pace it was at. This obviously presents problems. You got holes that need to be filled. December surprise. Euro area inflation unexpectedly accelerated. When do you ever hear about Europe's inflation accelerating? I mean, it just doesn't happen. Now, of course, energy being a big one. I know my friends in Europe, you've told me the stories about the prices that you're paying. It is unbelievable to say the least. Now, it's probably come off the peak for most people. Still, it is crazy. I know, and it is unfortunate. And whether or not this comes down somewhat is not going to resolve the overall issue long term. Looking at this, UK net consumer credit. Look at the amount of borrowing that people are doing. US, Canada, UK, wherever. And you have it at super low interest rates. But what happens when interest rates increase? That's right. If that's not fixed for that entire term, you're going to be in big trouble. In Canada, when you borrow for a house, you don't borrow for that 25, 30 years. Okay. You have to then refinance generally right around that 3 to 5 year mark. So now suddenly people, after a few years, they don't have that super low interest rate anymore because we know that rates are increasing. Oh, okay. They can increase a bit, but not that much before it starts to put pressure on people. The chip crisis decimated German passenger car shipments in 2021. This chip crisis, I mean, I could go on all day and I won't. I don't want you to fall asleep. But look at this, Japan household spending decline. People are worried. People are not going out. You've got the closures in the restaurants. You got the closures here. You got restrictions there. This is leading people to spend less money. Some places you could see Singapore's GDP rises at the fastest pace since 2010. Looking at this, Brazil's industrial production fell 6 straight months. There's so many things going on today, major developments. What is it that you as an individual can do? Like I said, that video that's posting tomorrow, check that out. But let me just tell you right now, you as an individual, you're seeing this. What's your situation? Address that. Ask yourself the questions. What do I have? I got my family, I got my friends, I got my social circle, I got people that are depending on me. Okay, all of these things. What can I do to make that change today? Well, I'm going to say, how much money do I have? How much money do I want to invest? What actions can I take today? Not if this and this condition is met. No. What can I do today? If growing a garden is the right thing to do, if you think that's the right thing, make it happen. Your investments, if you're overexposed, my goodness, be careful. Let's just look at this. This is Bitcoin's chart. Bitcoin went from nearly 70,000 essentially to now around 40,000. If you are overexposed to Bitcoin and you needed the cash today, you're going to be in big trouble. So that's why you have to hold different asset classes. Some give you cash flow, some are very stable over long periods of time, some pay you out month to month, some are very rock steady. Whatever it is, you have to understand that having all your money in one place generally is not a good idea in terms of the safety, security, and stability. You know, people don't want to address the root cause of a lot of the problems, but look at what's going on today and understand, when you have a rate increase, when you have inflation rates going up, when you've got things that are changing, headwinds approaching, we need to be paying serious attention. This is not 2017 anymore, okay? The Goldilocks, that was mentioned millions of times throughout 2017. China's real estate problems are spreading even to once healthy developers. This is not about Evergrande. Evergrande's big. Evergrande's got a lot of debt. Evergrande's got some serious problems and they can't pay their bills. Shimao, one of China's healthiest real estate developers, has reportedly defaulted, a sign of how more pain is ahead for the heavily indebted industry. When one domino falls, the rest go with it. I've been highlighting this problem and the others, and I hope that people are paying attention. All you got to do is take action for yourself. That's it. For yourself, your family. If you want to support me and the channel, all you got to do is click one button. Hit that thumbs up button. That's it. It's right down there to support me in the work that I do. Whatever you want to see, you let me know in the comments and I put it into the videos. I am always in search of the information you want to see. All right. That's all for this one. See you on the next.